Human nature is the same. Silver bounces back from oversold bottoms in anticipation of the gold move. The gold move happens, then the generalist investor comes into the precious metal space. Leadership changes from gold to silver. Silver goes crazy, and towards the end of the silver move, people take it to absurd heights. They pile on. That always happens. I suspect we're going to have a real good precious metals market this cycle, likely better than the one we had in 2000 to 2010, likely better than the one that we had in 1989 to 1996. I think we're going to have a real move in precious metals, and I suspect that the blow-off top in silver will be one for the record books. The truth is that all this time that they allegedly were manipulating the silver market, silver was going down all by itself. The U.S. dollar was very strong in the period 1982 to 2022. And you didn't need to manipulate something that was falling all by itself. I'm not suggesting that there wasn't short-term manipulation in the market. There's short-term manipulations in all markets. Markets as large as the euro-dollar market and the U.S. Treasury market have been proven to be manipulated in the very, very, very short term. Once we began to lose control of the interest rate in 2022, surprise, surprise, the dollar weakened and gold and then silver got stronger. There will come a time when silver will be manipulated up. I remember the 1970s when the overnight raids in the silver market were long raids, not short raids. I remember that very, very, very well. The same players, I would suspect, would build very, very, very large and very long variegated futures positions and then pile into the physical market because the futures positions were leveraged so that the overnight boost in those days in the price of gold and silver would produce outsized gains in the physical market. The same technique that they used in the period 1982 to 2022 on the short side. No difference. The time will come again. Understand that the manipulators take markets in whichever way is the easiest to take it. They're completely agnostic. And when it is easier to manipulate precious metals markets up than down, that's what they'll do. When the natural direction of the markets is down, but the preponderance of punters is on the upside in futures markets, the manipulators happily fill the mooches, in their words. When it's easier to fill the mooches long, that's what they'll do. The shortage of physical silver could be prevented in the future. You may recall 1987, when the silver price shot up as a consequence of Warren Buffett announcing that he owned 20% of the world's above-ground supplies of silver. An interesting thing happened at that point in time. We didn't know how much physical silver was in India, but the price of silver doubled in U.S. dollar terms, and the Indian rupee fell by half, which coincided with either a flood or a drought, I forget which, and the need that the Indian peasantry had to sell their silver, which was up fourfold in their terms, to feed their children. All of a sudden, supply came out of nowhere. The flow of silver, which had been from Dubai to India, reversed, was from India to Dubai. And we had more silver we could shake a stick at, of course. The people who were hurt by that blamed the manipulators, but the manipulators were really the Indian peasantry. Now let's get back to the base question. The silver manipulation works like this. The futures market trades some days 100 times, some days 200 times the amount of physical silver available for good delivery. Almost all of the contracts roll off worthless or are rolled over. Those are the two things that happen. Occasionally, the markets get unbalanced and syndicates of shorts go way short the silver market, borrow physical silver, which they blow into the market, take a loss on, and cover their shorts as the physical market, the tail wags the future market dog. Remember, too, that when some newsletter writers talk about a short squeeze, that's